One of the easiest ways to start investing for new investors is by investing in an ETF, an exchange traded fund. In this video or podcast, wherever you're catching it at, we're going to dive into ETFs. Let me know you guys' thoughts on ETFs. Do you like ETFs? Are you investing into any ETFs? What are some good ETFs for people to look out for? Again, I love sparking the conversation and making sure everyone is aware of the different avenues to get a piece of the pie. Let's get into it. What's up, guys? It's your boy Ty. I appreciate you guys coming to check me out on my channel or the podcast, wherever you're catching this at. I really appreciate you checking me out. My podcast and channel is all about making sure people are aware of the different avenues to get a piece of the pie. So I talk about investing, money, personal finance, retirement. I talk about it all because I do believe that starting the conversation and sparking the conversation might help someone down the road, or might give someone ideas to look into something that could potentially benefit them and hopefully make them wealthy. That's what it's all about. All right, so today we're going to be talking about the stock market and investing. And one of the biggest pitfalls of the stock market for a lot of people is sometimes it feels confusing. There's a lot going on. You always hear the hype, the noise of the stock market. This stock is down, this stock is up. Will it be a crash? Are stocks on a rebound? You hear that all the time. And a lot of times it can be a lot of noise, because you have to research which stocks are hot most of the time, research when you're going to buy, depending on what type of trade you are. Me, myself, I'm a long-term investor. So I invest into things like dividend companies where I can hold my stocks for a long period of time and generate passive income, or holding growth stocks for a long period of time until I, hit that sweet spot and I want to cash out on them. I don't do a whole lot of swing trading or options. I don't do a lot of that. I'm more of a pick a good company and ride with that company type of guy, because I like to keep it simple. I like to keep it simple with my investing in the stock market. So with that being said, you still have to pick. You can keep it simple, but if you are the type of person that wants to pick individual stocks, you still have to do, some good research on your stocks, understand why you're buying the stocks, and how to find those top stocks. You got to still look into that stuff. But what we're going to be talking about today is ETFs. And we're going to do some pros and cons too at the end between ETFs and individual stocks. So an ETF is like a basket of stocks. So an ETF is a fund that's listed on the stock market. And in this fund, it is managed by a company, and the company goes and picks stocks that they want to invest in, and then they find investors that basically like their picks. And if you invest in the ETF by buying the ETF, you will be investing in their basket of stocks. And of course, like I said, they pick the stocks out, and they sometimes change the stocks, and they just move, the investment from time to time. Some of them do, some of them stay the same. It's all different types of ETFs, but that's basically what it is. ETFs gonna, get investors to invest into a bunch of different stocks by investing into their ETFs. So basically, if you want to go and buy Microsoft, Google, the big names, and Google just did a stock split. Let me know if you guys bought that. But the big names, they cost, right? They cost. Their stock price is high, and they cost. So a way to invest in those companies would be to buy an ETF that's heavily invested into those companies, because the ETFs are typically much cheaper than those bigger stocks, right? So that is why people would like to invest into an ETF. And like I said, if you like the ETFs investments, the companies they're investing into, their holdings, you will, like that ETF. And this is a whole bunch of different types of ETFs. It's ETFs for certain sectors, like they're gaming ETFs, natural resource ETFs, they're REITs, REIT ETFs, growth stock ETFs, tech stock ETFs, a whole lot of different ETFs out there. Dividend ETFs. It's a whole lot of different ETFs out there, and basically, like I said, you will invest into the ETF, which is investing into a bunch of different companies, and you can see what companies they are investing into. Like a lot of ETFs follow an index, and they follow an index, which is basically a list of stocks that they deem are suitable for their ETFs. Sometimes it's large cap stocks, sometimes it's small cap stocks, but like I said, every ETF is different. It is different, but investing in these ETFs allows the investor to just solely buy the ETF and invest in the ETF and not worry too much about certain stock prices going down and up, when to sell, when to buy. They would just buy the ETF and keep riding with the ETF instead of watching a whole lot of stocks. Some people do like to have a whole lot of stocks, so they invest into a whole lot of different companies, and that's to balance their portfolio and be diverse. Because if you are investing into solely just one company, if that company does good and you only invested into that company, hey, you lucked up and you picked that best company for your money. People can do that, and it's possible to do that, but a lot of people like to play it safe, and they play it safe by investing into the ETF, which is a basket of multiple companies. And this is basically diversifying their investment. A lot of people like that better than just investing into one company, because again, if that company goes down, guess what? Your money does too. So a lot of people like the ETF for a little bit of security. They can sleep at night. But right now, I'm gonna go over some of the benefits that I see and pros and cons when it comes to investing into ETFs. So one of the biggest ETFs out there is the SPY. The SPY is used as an index for the whole overall market, because they are investing into a lot of companies. They are invested into a lot of companies. The S&P 500 is mainly what they're investing into. So it's a lot of companies in the SPY, but it's one of the most popular. So when you talk about growth, the SPY is one of those companies, is one of those ETFs that focus a little bit on growth and dividends, a little bit of both, but mainly growth. So over this past year, the SPY is down 10%. Over the last 5 years, the SPY is up 56%. It's pretty good. The SPY is doing good overall. Of course, I said pretty good because the 5 year looks good. 56% is decent. 1 year is down, but the markets have been crazy, so a lot of things are down. So it's down 10%, and it pays last year in 2021, it paid a annual dividend per share of $5.72. So shareholders even get a dividend off owning the SPY. They get a little bit of growth and dividend, right? But some of the big name companies that are in the ETF, like the top 10 holdings. So you're talking about companies like Apple, Microsoft, Google. There are some of the big holdings that's in the SPY. If you look at Apple, over the last year, 1 year, Apple had an increase of 2.18%. So it's up a little over 2% for the year. And for the 5 year, this is where it gets like crazy. For the 5 year, Apple is up currently 249% over the last 5 years. So you guys hear those big numbers, right? That is one of the downsides to investing into an ETF. So I said the SPY only grew 56% over the last 5 years, but Apple grew over the last 5 years 294%. It had a way better growth than the SPY, and it blew it out the water. So some individual stocks will explode. So that's one thing about the individual stocks, that they get that point, because if you only invested into Apple over the last 5 years, your money would have grew 294%, period. So that's something that people need to look at when they are investing into ETFs and individual stocks. But we talking about Apple, Microsoft, Google. These are big names, and we already know they have been performing well. So next, Microsoft. Over the last year, Microsoft is down a little over 8%. And over the last 5 years, again, Microsoft has grown 250%. 250%. That's crazy. And again, the SPY can't get up with that, right? The SPY is nowhere around that 250 mark. It's just up 56% over the last 5 years. And then Google. Google is down for the year 13+%. And right there, that's lower than the SPY. Because I said over the last year, the SPY is down 10%. And over the last 5 years, Google had an increase of 123%. And even that is still killing the SPY. Now let's take a look at the SPY-D. Over the last year, the SPY-D is up 2%. Over the last 5 years, the SPY-D is up 11%. And the SPY-D has a dividend yield of 4.11. That's pretty decent. Nice dividend yield, nice slow and steady growth. That's typically what you want to see from a dividend company, right? So on that note, like I said, the dividend ETF of the SPY-D does look good. Now let's see about the individual dividend companies. Some of the top individual dividend companies in the SPY-D are oil and fuel companies like ExxonMobil. Over the last year, ExxonMobil is up 54%. That's crazy. 54%. And you guys know, because the market has been doing bad for a lot of stocks, but the oil has been booming. Of course, y'all know, because the gas prices are crazy, right? So that's why ExxonMobil has been doing good. But As you guys see, it straight blew the SPY out of the water for the 1 year. And that's because this has been a great year for oil companies and fuel companies. That's why over the last year is up. ExxonMobil is up 54%, and the SPY is up only 2% for the year. So this goes back to the problem, or what we were talking about ETFs. You won't see the growth from every stock, because at the end of the day, you are investing into an ETF which has a bunch of different stocks, not just oil stocks. So oil stocks had a great year, and that's why they're booming. Next is Valero. That's another oil company, and for the 1 year, it is up 71% in 1 year. Over the last 5 years, it's up 56% over the last 5 years. So again, we're hitting that same old story that the individual stock has grown and outperformed the ETF. Another thing to keep in mind is that, especially when you're talking about a dividend ETF, slow and steady growth is great, because these older dividend paying companies, some of them that pay the best yields, they typically don't have that much exponential growth. They typically don't grow that much. So, that's something to think about if you are looking for dividend investing and a dividend ETF. That's something to consider. And if I haven't said it already, this isn't financial advice. I'm not a financial advisor. I just show you guys and tell you guys the things that I have been through and what I see in the market. All right. So for my new investors, if you're still on the fence, I know you guys have asked this question: should you invest in stocks or ETFs? So we're going to go over 3 factors to consider. First, how much are you willing to research? Individual stocks take a lot of research and know-how about companies, if they're making money, understanding how to read their balance sheets and things of that nature. So how much research are you actually willing to do? That is a factor. Another factor is, how personalized do you want your portfolio? If you're investing into an ETF, your portfolio is basically whatever that fund has picked. If you are the type of person that wants to hand pick your own stuff and you want to feel like your stocks are your stocks, individual stocks might be the way to go. And lastly, are you a hands-on person or a hands-off? So if you are investing into an ETF, it's going to be hands-off. It's going to be easy. You just keep buying more of the ETF. That is the name of the game. If you are a hands-off person, that's perfect for you, an ETF. If you are a hands-on person and you like to be in control of what stocks you have and where you putting your money at, you would rather put half of your money in a strong dividend company and the other half in a growth company, you can do whatever you want, because you aren't reliant on an ETF or a exchange traded fund. You can really just be in charge of your every move. So it all depends. But if you are someone that likes to be hands off and want your investing to be as passive as possible, an ETF is a way to go. And they have all types of ETFs. They have ETFs for tech stocks. They have ETFs for financial stocks. They have ETFs for gaming stocks. They have a vast majority of different types of ETFs. So you kind of can still personalize and pick the type of ETF you want, but you won't be able to handpick the stocks. So it's all on you. But I do think it's an easy way for people to get their feet wet in the stock market. So let me know what you guys think about ETFs. And I appreciate y'all checking me out. Peace.